Hey, welcome into the Voices of Wall Street. I'm your host, Dion Rabowen. With me, we have the best possible guest that anyone could get this week. I am talking to none other than Ben Kohn. He is the CEO of PLBY Group. Y'all might know it as Playboy, but Ben is transitioning. We're moving in a whole new direction. Welcome into the Voices of Wall Street, Ben.
Thanks for having me. I appreciate it.
Hey, so let's talk about that new name, PLBY Group. Obviously, I think a lot of folks on Wall Street have known about or been talking about that transition from your father's magazine, Under the Bed, to this new digital-focused, consumer-oriented brand. Talk to me about the name change, PLBY Group, no longer Playboy.
Yeah, it really signals the ambition when I joined the company 3 years ago to form a holding company to leverage the Playboy brand, but to add other brands and businesses on top of it. And so I'd spent the previous 20 plus years in private equity, buying some great entertainment companies, investing in some of the top tech companies, Twitter, Facebook, Square, Snapchat, et cetera. And what we saw was an opportunity to actually not do private equity where you're constantly selling companies to raise your next fund, but i.e. a Liberty Media to build something for the long term. And so PLBY Group really signals our desire to become the leading pleasure and leisure company in the world. And we believe on the back of Playboy, we could do that.
Yeah, and you talk about pleasure and leisure. We're going to get into that and all the things you do. But I think what's got the market so excited and what's got your stock going through the roof right now is the opportunity in NFTs, non-fungible tokens. Talk to me a little bit about Playboy stepping into that space. You recently made a pretty big acquisition. So just talk to me about that.
Yeah, look, I mean, NFTs is really exciting. I believe the market for NFTs is still in its infancy, although yesterday they announced that last month they did $2 billion of NFTs in the month of March. And I think Top Shots alone was, what, 450 million, give or take. So it's a huge opportunity, but this brand is so much larger than that, right? This is a brand today that drives over $3 billion of global consumer spend. Products are sold in 180 countries. NFTs to us are a really interesting opportunity to monetize not only new work that we will commission, but really those 10 million pieces that we have in our archives, plus our 5,000 piece art collection. And that art collection is anything from Warhols to Leroy Neiman's to Salvador Dali's. We have a Matisse in our main conference room, or the board conference room, that John Lennon actually put a cigarette out in one night when he was at the Playboy Mansion on the Bender. And so when you think about the ability to actually tokenize or offer those opportunities up to a much larger audience, and I sort of talk about the Warhols. So the Warhols worth millions of dollars, right? How many people in the world can afford a multi-million-dollar painting? Very few. But when you think about the ability to actually tokenize it and give someone authenticity or ownership in that, you can create fractional shares of the Warhol. And that's, when you think about the psychology and what's happening to society, really living in a digital world. So, you look at kids today, kids are living on Fortnite, on Roblox, et cetera. I think there is a psychological shift that is happening in society, and digital wallets or crypto wallets in the future are going to be very important to people's identity. So it's that, but it goes well beyond just the art collection, right? We have those 10 million
So wait, real
pieces.
quick, Ben, but before we move beyond the art collection, I want to drill down on that a little bit because you talked about tokenizing fractional shares, all of that. So I think what most people are used to with NFTs is one person kind of buys the NFT and then they own the copyright, they own the the imprint on the blockchain, and that's how it goes. You're talking about basically spreading this ownership through multiple people. Would that then stay with Playboy, as in you guys would, it's kind of thing where it's all of ours, but it'll stay at our house? Is that kind of what you've gotten on the plan?
Well, so there's a difference between a digital ownership right and the physical ownership right in the painting. And it can be both. So you could actually sell a digital right coupled with a copy of the Warhol, for example. You could sell just a digital right of the Warhol. I would imagine that Playboy will continue to maintain some sort of ownership in this art. But from a blockchain perspective, we might decide to sell 49% of it. And keep ownership of 51. And that's what's so interesting about the blockchain technology when you think about NFTs, is that you can actually create fractional ownership interests in this. And this is happening if you look at Rally Road with baseball cards, where baseball cards are going out and they're actually fractionalizing baseball cards. And so when we think about, what is the original Marilyn Monroe cover worth? Okay, it's worth a lot of money, right?
Yeah, absolutely.
The original negatives are worth a lot of money. We can either sell those as one-off, so it's one of one, or we can sell them like if you think about what happened to the print market in art, right? So you took an original Leroy Neiman, you did one of 100 prints off of it. You can do the same thing with NFTs. And what's interesting about it is when you look at the business model downstream, right? I'm interested in building long tail revenue streams. Is not only do you monetize 80% or you receive 80% of the initial sale, every subsequent sale thereafter, you receive 10% of. And so if you tokenize or fractionalize, these big pieces of art where we can create a much larger collector universe than one of one, right? Every time those trade thereafter, we receive 10% of that trade. And that lasts into perpetuity. And so when you think about a 10 million piece, archive, and we're talking about the Steve Jobs interview, the MLK interview, the Jimmy Carter interview.
All these Playboy interviews from back in the day.
For 68 years. You're talking about, the original Marilyn Monroe, the Pam Anderson, the Cindy Crawford photos, all of that. The ability, it's such a rich archive, the ability to monetize that over time, both through original pieces, creating new pieces, creating collages off of it, it becomes really, really interesting. And we believe for us, long term, there's a big business there.
So let me just make sure and drill down and be sure that I understand you. So in essence, when you sell, let's say, for example, that Marilyn Monroe original, right? You're selling the NFT to someone, and then Playboy maintains a stake, PLBY Group, let me correct myself. PLBY Group maintains a stake in that NFT ownership. So when that owner sells it to the next person, you all are still getting a 10% cut. Is that correct?
Yeah, so the ownership stake and how the blockchain works is slightly different, right? Obviously, the blockchain establishes ownership, and in that digital contract, we can determine or we can dictate what terms we want moving forwards. But the answer is yes. So if you look at the deal we've signed with Nifty, for example, right, we get a percentage of the upfront sale, and then we get a percentage of every subsequent sale thereafter. And so the same thing works whether or not we do it with Nifty, Super Rare, or even on our own platform. We can create a downstream or down market revenue stream that is a long tail that lasts in perpetuity for every trade thereafter. The physical piece is separate than the digital piece.
Got it. Okay, so the physical piece is going to be sold between collectors, etc., but the digital piece, Playboy is going to get a piece of every sale of that token, essentially.
That's correct. Or on the digital piece, on the physical piece, you might say that we're not going to sell it, but we're selling just the digital rights, and so therefore it's a one of one or a one of 100, depending on how you want to monetize that down the street.
Okay, and then you all could still keep the physical piece. That's really interesting.
That's correct. That's correct.
Got it. And so, like I said, the NFTs is what's got a lot of folks excited, but what other people are still talking about, obviously, is this new and expansive approach you guys have to licensing, to marketing, direct to consumer, because that's what's got a lot of stocks booming since the pandemic hit. Talk to me about Playboy or PLBY Group in 2021. Obviously, last year, I think your revenue growth was 118%. How do you plan to continue that growth? You talk about China, talk about direct to consumer. What's PLBY Group got in store for investors to get them excited, get their mouths watering a little bit in 2021? Yeah.
So look, this is a 68-year-old brand. It's one of the top 10 brands in the world. And so I equate it to, if I gave you the opportunity to buy the Nike swoosh without the business model behind it, what would you pay for that type of recognition on a global basis, right? You could spend billions of dollars today and you can't recreate what the rabbit head means on a global basis, right? In China, we are the top men's fashion brand, right? We have 3,500 brick and mortar and e-com stores. And last year we did in excess of $1 billion in sales just on e-com. And so last year we grew revenue 89%. Fourth quarter was obviously larger than that, but still staggering growth with basically no capital. And so when we went public through Mountain Crest Acquisition Corp in February, we now have $100 million of capital to actually really accelerate our growth going forward. What's so interesting about this company and this brand is, unlike other brands that maybe play in one product category, this brand has historically played in a really wide variety of products. And so we're organized around 4 multi-billion-dollar fast-growing categories. Sexual wellness, which is, for us, probably the largest opportunity.
Mm.
Style and Apparel, our streetwear business in the United States last year, grew by over 15 times over the last 2 years. We passed north of $100 million with just PacSun and Misguided alone in sales last year. Digital gaming and lifestyle. So lifestyle would be where the NFTs fit in. And then the fourth is beauty and grooming that we're really excited about because there's a direct crossover between beauty and grooming and sexual wellness. And so when you think about the spend, the business model historically was a magazine and it was a licensing business. And we're pivoting that licensing business domestically to own and operate ourselves really through a D2C strategy. Just brought in a great
direct to consumer.
Great person named Kevin Diamond, who joined us from Forever 21, $700 million plus e-com business. Before that, he was the co-founder of a company called Halt Look that they sold to Nordstrom, and then he built out Nordstrom Rack. And so the consumer spend is already there against the brand. So not only are we going to continue to grow consumer spend by introducing new products and categories, but we're going to capture more of that existing $3 billion of spend ourselves. And so when you think about that PacSun and Misguided business, we receive basically 4 to 5 cents on the dollar, okay, of that sale. So on the $100 million, we book about $5 million.
Okay, that was a question I was going to ask.
So the opportunity is to actually take that $5 million and move it to the $100 million moving forward and still grow the consumer spend against the brand because the brand's had a massive resurgence with Gen Z. Yeah. And so, you think about 5 to 100, okay, well, that's a 20x increase in revenue. And then when you think about the profitability of that as well, our profitability on that $100 million, we should, in streetwear alone, should generate roughly a 25% net profit margin on that. And so I want a 5x increase in EBITDA.
Yeah, and I want to get into that profitability question, but I want to first go back to something you said in terms of the merging of different opportunities for PLBY. So you talk about sexual wellness, you talk about that kind of a lifestyle segment. How do those sell for Playboy? What are you moving, and how is that market growing so that it's such a big part of your future plans?
So sexual wellness today, the way we define it, including lingerie, is a $240 billion global industry, right? Projected to go to $400 billion by 2024. For us, it's not about branding everything Playboy. That doesn't make sense to the consumer. And, I think when you're running a consumer product company, I think there's that great Jeff Bezos, article or quote talking about meetings and keeping an empty chair in the room for what does a consumer think of this? I think for us, Playboy symbolizes really the guide, the pleasure lifestyle guide. What's the best lingerie? What are the best sex toys? What are the best of the best? That's what we're going to be selling. It might be owned and operated that are in those categories, but it doesn't have to be Playboy branded. For us right now, we have a really interesting line of CBD products that we've launched. Those are off to a great start. This is Playboy branded, obviously. We bought a company called Yandy. We bought a company called Lovers. They sell a wide variety of brands, of which Playboy will be one. We've had a very successful launch.
And so, Ben, sorry to cut you off here, but let me just ask you. So is the idea that you buy these brands, you continue to let them brand themselves, and you stay in the marketplace that way? Because I would think, my thought would be the whole, idea behind Playboy buying these brands is to get the distribution and the mechanisms for getting them out to the market, but to rebrand as Playboy. You're saying that that's not the case.
It's a combination of actually both. So not only do I want to keep those brands thriving and those marketplaces thriving, but I'm using the skill sets for the acquisitions that we've bought to actually launch Playboy owned and operated products. Okay. And so why, if we were to go buy, XYZ company, would I want to cannibalize that business? I want to actually take a business like, a company like Yandy that we bought that we grew 45% last year and add Playboy branded products to that so that the platform, instead of growing 45%, can grow 100%. Okay. Right? I don't want to cannibalize what's there. I want to be additive to it. And that's the synergies that we see in some of these acquisitions that we're in the process of right now. Is not only am I buying a great brand or a great business by itself, but I can leverage that skill set to then launch Playboy lingerie, for example. Okay. And so now it's 1 + 1 = 3. And that's what's so exciting by what we see. And the sexual wellness business is highly fragmented. It's really only become mainstream here in the last 5 years. So now you have places like CVS and everywhere else selling it. Gwyneth Paltrow's going on the Ellen Show and talking about her favorite vibrator, right? Goop just launched their own line of vibrators. And so this has really become mainstream, but it's not only in the United States it's become mainstream, it's becoming mainstream everywhere in the world that we see. And so, I was doing an interview a few weeks ago with a reporter in China, and she wanted to talk to me about her best friend starting her own vibrator company in China. And so in China, it's a huge opportunity as well.
Wait, was she asking you for tips? Was she like, Ben, how should she do it?
No, she said you should talk to her. This is a really fast-growing segment. I actually saw it, obviously, with COVID. We haven't traveled in the year. 2019, I went to China 10 times, and we saw this with Durex. Durex was a condom company. Durex has now launched a whole line of bedroom accessories in Asia. You're seeing this when you walk into CVS right now. Trojan, again, Church and Dwight owns Trojan, one of the largest condom companies in the world. Trojan now has their own line of vibrators. Okay, so you walk into that sexual wellness aisle at CVS, not only do you see Trojan condoms, but you're seeing Trojan vibrators. And so it's become mainstream in society. There is no dominant player. We think this is right down the middle of the fairway for us from a brand perspective. And it's a category on a global basis that we could become a worldwide leader in.
And is this a category where you intend to launch, market everything Playboy brand, or is that kind of the same strategy where some things will be Playboy, some things won't?
So specifically in sexual wellness, it's actually the strategy that I laid out before, which is some of it will be Playboy branded, some of it won't be Playboy branded. It wouldn't make sense to the consumer to have everything Playboy branded. In the style and apparel category, obviously, today we're focused on only Playboy branded IP or sub-brands that we're creating. So we announced last week that we're bringing back the Big Bunny, one of the most famous airplanes ever, probably outside of Air Force One. We'll bring that in the summer, but not only are we bringing that back and using it to engage celebrities and influencers, we're actually launching a high-end product line on the back of that, under the Big Bunny or under the tail number N950 PB. And so that's going to be travel wear, luggage, et cetera, but a much higher price point than our other stuff. And so that's a brand that we can create domestically, and then we can decide internationally, do we want to license that or do we want to own and operate that ourselves? We're doing the same thing with Playmates right now. So we've actually stopped shooting Playmates. We're rebranding and relaunching Playmates as a consumer product business, really focused on women by women. So it's by women for women. Owning your own sexuality. It could be anything from swimwear to lingerie to even bedroom accessories. I mean, imagine having a whole line of mates or playmates out there as bedroom accessories.
Wow, okay. So you've got some big ambitions. I want to talk to you a little bit just about the numbers. We've talked about the growth and revenue in Playboy, but I think revenue last year was only about $148 million, whereas right now the market's got you valued about 1.5, 1.6 billion, depending on where the stock is moving today, because, we've seen 20, 30% increases in Playboy's stock price. Do you worry that the market's getting a little bit ahead of itself and that that's going to lead to a pullback that's kind of going to sour the market on you guys just because you've risen so high that maybe, because the actual numbers and sale aren't keeping up with that some investors start to say, hey, you know what, I can't touch this?
Yeah, look, I'll let the investors determine what the valuation of the company is. What I've talked about is I'm in this for building this for the long term, right? I want to constantly deliver, steady growth numbers over time. I'm not looking to be a hockey stick. We're looking to build long-term businesses here, right? So it would be very easy, for example, in the NFT space for me just to take my whole entire catalog and put it out there, and I could generate a ton of revenue. Okay, that from a business perspective doesn't make sense. And so, look, I own a lot of shares. Personally, I'm not selling anytime soon. I think that when you think about the run up in valuation, and sure, it's nice to see that, but I think for so long investors were missing this. And I go back to that Nike equation, which is if I gave you the opportunity to buy that swoosh, what would you pay? And so when I think about what the rabbit head is, this is one of the biggest pieces of IP that exists in the world. It's a top 10 brand. It's the only brand for so long that was valued under $1 billion. We have a bad business model that was a legacy business model that we're in the first inning of changing. We're seeing unbelievable growth for that. And I think what investors are starting to see is all of the endless possibilities that we have in the future. And so, I don't think they're valuing this just based on revenue, right? Because obviously, sure, we could look at that and say, well, that's an expensive multiple of revenue, but maybe not. You look at a company like Hims, which is in telemedicine, selling a generic product. They went out and they were valued at like 11 times revenue out of the gate, right, and traded up to like
Yeah.
17 times.
Right.
And I
Right.
would argue that that is a tougher business than we're in because there's no brand there that's defensible, right? Amazon bought PillPack last year. If they want to get into that, I'm not saying they're going to, but that's a much harder thing to defend than a brand that is globally recognized that has $3 billion to spend against it. And I'm changing that business model to capture more and more of that spend. And so I think what investors are seeing is that possibility for that growth in the future, plus the NFTs and everything else that come along. And I think one of the things I've always done in my career is I bought great IP or had rights to great IP. People much smarter than me will figure out new ways to continue to monetize that in the future. And so 2 years ago, you weren't talking about NFTs, right? NFTs are a new way to monetize it. I equated to, back in the day, I owned a talent agency called ICM, right? First person to ever buy a talent agency in Hollywood. And everyone said, you're crazy. Your assets walk out every night down the elevator. I said, well, wait a minute, this is California. I'm not so sure I agree with that. This catalog, back then was DVDs. No one knew about streaming. All of a sudden, there's a new revenue stream that emerges that you can monetize in the future with that. And I think that's the same thing with Playboy. When you have 68 years of Americana, okay, from Marilyn Monroe to Cindy Crawford to Anna Nicole to Pam Anderson to the Steve Jobs interview, the MLK interview, etc., you will find new
Malcolm
ways.
X. Don't forget about my brother Malcolm X. Now, that was a great
Malcolm X as well. And look, and that's what's so interesting too is, I think people get caught up in what happened with Playboy in the last 20 years of Hess life. The social causes this company fought for, those First Amendment rights, those equality rights, the personal freedoms, those are timeless. And I think that's one of the things that we've seen, and we've relaunched the Playboy Foundation, really fighting for those First Amendment rights and that equality. Yeah. This company has such a rich history of being on the right side of history that I think that also creates a real emotional connection with consumers.
And speaking of that, I saw that Medium post you did advocating for Congress to pass the MORE Act, which would reform the cannabis laws in this country. And I know cannabis is another sector that you guys are looking at entering. We talked a little bit about CBDs. Last question I want to ask you, Ben, before I let you go, is just about the future. You talked about $100 million to play with as a result of going public via the SPAC and PLBY Industries or PLBY Brands. Definite, going in different direction, having a hand in all these different markets. What's the area that you're most excited about and the place where you see the best possibilities or most exciting possibilities for expansion of PLBY in the future? In the near future, I should say.
So just quickly on cannabis, let's get Congress to pass this. Come on. It's been way too long for this country. They're creating a black market by not passing it now that New York's passed it. But look, I'm most excited by the brand, right? This is a brand that is timeless. And new businesses will constantly emerge. In the short term, we're very focused on sexual wellness. We think there's a huge opportunity to become the global leader in that space. Obviously NFTs are an area that we spent a lot of time on over the last few months, very focused on rolling that out and building a big business there. But look, it's every facet of our business. I'm lucky that I'm surrounded by a great management team. We have a ton of bandwidth. And so the team's executing on developing in India, developing on China. But the two biggest priorities right now for us are becoming the market leader in sexual wellness and focusing on NFTs and continue to transition our licensing business in certain areas to a direct-to-consumer model so I can increase my revenue 20x from 5 cents on the dollar to 100 cents on the dollar. I also can give the consumer a much better experience if they're buying products from me because I can make sure from a branding and a marketing perspective, there's consistency in that.
Yeah. All right. Ben Kohn, CEO of PLBY Group. Look, Ben, thank you so much. It was a great interview. Appreciate you coming on the Voices of Wall Street.
Thank you for having me. Appreciate it.